learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming into August 20th, 2020, and the Fed moved the stock market. A little bit surprising today, or at least it surprised me. The Fed minutes came out. We were expecting this, but not expecting this kind of large of a move. Now, halfway through, it didn't, I thought it was big off the reaction, but then it was like, all right, it was only 1 point, but almost about a 2-point move, a little bit more front to back or full circle, but this was surprising. The Fed minutes have not really normally moved the market unless new information is presented, and now there was some stuff. I still did not go over it fully. However, there's already different interpretations going around again all over the financial world, and even some of the most immediate headlines, it has to do with yield curve control and bonds. So we know a little bit about that. I want to talk about that. It's interesting to see the reaction. What we have to look for this week is, does it continue? And then we talked about this today. What happens when or if it bounces? And then kind of the reaction with the premium. So we have a lot to talk about. I have that. I got the keys. I got the plays that we made today, the plays that I'm looking at for tomorrow, and that is pretty much it. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/the stock market. You could post the plays, see the plays, watch the watch list come to life, and yes, you could watch and listen to some really intense interactions throughout the day regarding finance and saving money and getting a long term. It gets intense, and different topics. I mean it's cool. I hope you're up for it. I hope we see you there. Thank you for being there. And the most important thing you need to do, post or watch this below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad. So right off the bat, first thing, like we said, the minutes, they came out. They shouldn't have moved it. One thing I said, there was a lot more explanation of the economic situation or explaining some of this recovery. They talked about it a lot more. It seems like, again, if you're not familiar with the minutes, it's like a boardroom meeting. It's recording kind of the main topics and things that were discussed that led to their decision. In this case, this is the Federal Reserve. So the last meeting you saw around July 29th with Jerome Powell, he came out with a decision. They didn't raise rates, but then he had the press conference. The market got to learn from that. We've been documenting that. We follow that. That's why we say the Fed is important. Now, these minutes are from that last decision almost a month ago. So we're seeing how they came to the decision. Now, like I said, there was more explanation of the economic situation, but this whole yield curve control, they pretty much said that they're not really liking the yield curve control, and they pretty much gave the signal to the market that they're not going to support the bond market. Now, this is where it gets interesting. This is where you say the markets didn't like it, because the markets moved pretty decently following this meeting when, like we said, the minutes don't really move them. So what does that mean? That means between what we heard from Powell and then now the minutes that told us how they came to the decision, seems like there's been a little bit of a gap, and I think it has to do with this yield curve control and how the Fed is going to be handling the whole bond situation as they've been doing since the pandemic started. So that is the mini analysis on it. There's still a lot more to it. Again, I think it is important, but not really. We will see if it's important, if it lasts duration-wise, and if we see this kind of continue at a large pace tomorrow. So I'm going to be watching out for that. As far as everything else, there is still some earnings. I said watch the rotation. So we've talked about the rotations last week. Yes, they still exist, but now it's kind of getting the signal for me that it's going to be some of these bigger stocks. So the main rotation I'm watching for is going to be between these companies that have really been inflated, kind of pretty much rotating out of the big winners because of the virus. A lot of big winners. There were some who won really a lot more, but there's big concentrations of the market cap. So the fact that we haven't seen the normal rotation take place, we still have some earnings. If anything, I'm going to be looking towards those bigger names to see it happen. Otherwise, I'm going to be watching commodities, the dollar, and even just trade data to signal if something is actually kind of going on. And again, even pair that with the Fed minutes to kind of get an idea of, okay, we got some stuff brewing here, or we're going to have a situation that would allow for more highs coming into the election. So it could still go both ways, but there's still a lot of stuff. We talked about it today. Again, watch the commodities, watch what's happening. Again, how silver and prices, all that stuff has been moving. That has caught my attention. I'm looking at it, but kind of how it all connects and asking why. We talked about that today. So you will see with some of these plays, and we will actually begin discussing right now. So let us get into the plays. So right off the bat, there's a few plays that we made. I did 2 plays today, but the play I'm going to be looking for tomorrow is not going to be UUP. But I want to talk about this because I like it. So I'm not saying this is the play I want, but today was one of the bigger days for the dollar. Again, with kind of how the market is going to interpret this, I still need to see, again, watch bank stocks, those move. Those are going to be something I'm looking at tomorrow. But the concept of UUP I like. What I like right now, and you kind of saw me pick it up, but this is where you have to especially be careful for if you're using options as the vehicle. Again, always look at the premium prices, and none of this is a recommendation. You know that it's across the screen. But this is a bigger candle, so if you want to try to buy calls on UUP right now, you have to understand you're going to pay more for it if you could wait a few days. It'll probably level out. You don't know what's going on here. So what I'm talking about, though, with this concept, and I'm going to look for some of these plays tomorrow, it kind of explains now some of the plays that I even made today, even alongside the EEM and the EM I talked about yesterday, and as far as any external events would go or anything of that nature. But the idea with UUP is that these are kind of insurance plays, so I like them now because you're seeing the market's been extended. We've seen a real crush with premium, and now we know we're kind of rounding the corner coming into an event that could kind of move markets or at least raise the prospect of volatility, aka the election. So I'm kind of setting up for that kind of in a way where it's like earnings. So in a sense, the aspect I like about UUPs, or there could be similar plays like it, again, it all depends, and I encourage you to look and even source those ideas. Again, look at premium, bring in the information, use what you've learned, but I like the idea of cheap insurance. Now, this is all relative to balancing the budget, what you want, but I like cheap and I like something that's good. So that's why I'm like, I like some of these because now UUP has really declined and it's been about 3 months. Okay, now you could kind of, you can nibble a little bit. So I like that concept, but I'm still letting some things unfold. So that's the first play I'm looking at. As far as the other plays and the other ones I'm watching, again, I'm going to watch Target as a continuation. That's the one play I made. That was the first play I made this morning. Or no, I got the EMs before that. Damn, that's crazy. I thought I got the targets first, but well, one thing, Intel shot up after hours. I'm going to watch that. They had news of buybacks, man, chip makers. We were talking about that for the long term. But Target had a just absolutely stellar earnings. I think they're even up after hours here a little bit, but they killed it on earnings, like really, really, really beat expectations. And I think that was even a little interesting. I think this is what the CEO said. And I thought it was interesting from an economic perspective, but he said Americans are spending their money that they would have spent on vacations on Target. So he said it's not just stimulus money, but saved vacation. People just took a vacation at Target. They bought inflatable pools. Shout out to Zach. Thank you. But we use the typical earning strategy again in the morning. I mean, what time did I get it at? Oh, I sold those at 9:50. No. Yeah, so I bought those in the morning. Yeah, I got those within 5 minutes in. You guys have seen it. Again, wait for the earnings. I kind of waited for that first little sell-off. I thought it was good earnings. I mean, it was up like 8% at the time, I think. It was already up a lot. So you could kind of even see with the play, it was already up a lot. I liked it. It had a decent amount of time. I was like, okay, I think there could be a continuation. It dropped a little bit. And again, as far as premium, they weren't too high. I think I paid 100% premium on them still, but at the end of the day, I bought 4 of them for $100. So you could tell by even how much I spent. I didn't really think it was going to be too big of a play. It went up, within 20 minutes, it just kind of shot up from there. They tripled in value, sold back 2, got back $150. So I netted 50% profit from the initial trade. And now I got 2 of these for free and I'm just riding those out till September. So we'll see on the continuation, but going to be writing that and playing that one out for tomorrow. Yeah, and I want you guys to see here, this one was actually like a snipe. So because again, I showed this the other day with these earnings continuations. Just watch how much you're paying from the day before. I bought 4 of these at 25 cents, but at one point yesterday, they were going for 23 cents. So the idea was this stock reported, blew it out of the water. I didn't play it for earnings. I woke up in the morning within 5 minutes. I let it do its thing. Again, this option was trading even before I got it. Remember, I got it at like 9.34. It was trading at 50 cents. People rushed into it. It's doing its thing. And then it dropped. And then we were able to scoop it around here at the 25 cents. And then the rest was history. But you see, that was just slightly above where it was. So it was still like almost 100% premium from the day before. It was still further out the money. Again, it was still reacting to the movements. People didn't know if the gain would hold up. So this is how you're able to take advantage of it. It's not knowing the continuation. It's not knowing what target's going to do. I can't predict this. If I mean, I could and tell you that and sell it to you. But the key is it's simply in the premium. It is there wasn't a premium as much on the play, or at least to justify this trade. We already knew the information. They killed it on earnings and they'll do good. It might continue, it might not. You've seen it before, you've seen it fail. I only put in $100. I kept it small for a reason that was reflected, but the main concept was I was able to get this play after getting the information without paying too much of a premium. Where a lot of you guys are going to lose, or where you chase these plays and this doesn't work, is if you're paying a huge premium over the day before. So it's like getting the earnings play. It's like if I bought that play at 50 cents in the morning, I still would have made some money, but it's really a whole different trade. Like you could see here, these were at 70 cents when they closed 60 cents. They opened up at 240. These were already up 400% for the most part. And at the same time, I didn't know it's going to continue. All options expire. I don't really want to spend $200 on there. Again, I got 4 contracts for $100. And if I really wanted to, I could have got one. But those ended up in the money. That's crazy. But you could get the idea there. But I want you guys to see that because we even did that on the play with Oracle. Remember, it had the TikTok news. I woke up in the morning. Again, the news came out. The stock's ripping. We found the options with no premium. So if you find those, call those out as well, too. That's why I'm teaching you this. Source it, baby. But that was the first play, and then the next play I made, I got EEM. I actually ended up doing this on the Robinhood account. So let's use some cash here again. I pretty much got all those insurance plays. So if you want to see some other losses here, here's $1,800 down the drain for the most part. That's another loss before I show you that play. Maybe you want to see another IWM, another $1,900. Oh, look at that. Beautiful. Oh, yeah, we already saw UUP. So I kind of use this as insurance because you guys have seen me buy a bunch of stocks and really hold a lot of cash in here. Again, keep in mind the cash balance, but I grabbed these EEM puts. Damn, I got that much? I got 100 of these at 27 cents. I thought these were cheaper, but I guess they have January, so this is different. Remember yesterday I got December. Again, same logic as the ones from yesterday. And this concept of picking up a little bit of insurance in different fashions. So that was the second play. And then finally, everything else today was just selling stuff too. Those Mylans ended up going up. I sold 15 of the 30 at 11 cents. I got them at 6 or 8 yesterday. I thought that play was going to be a dud. It expired Friday, so I at least got all my money back with a little bit of profit. And then Oracle, remember I had these. I was able to sell, I think, 33. It wasn't liquid enough to fill the full order. I was trying to sell 50 of them, so I have 66 of them left. We bought those yesterday, but I think I'm going to hold the rest. I pretty much got most of my initial investment back, but I like that. Going to be holding those, and then I sold 2 of these August. Again, NVIDIA earnings. Had its earnings today. I held these. We've been talking about how wacky the premiums were. It's been jumping between 50 cents and $1. Someone reminded me they had earnings. I saw them today. I had 3 of them. They expired this Friday. I sold 2. I said I'll hold 1 in the earnings, but give me the rest of the money. Made that one free, and you saw what happened with NVIDIA. But I will look for a continuation on NVIDIA if that's popping there tomorrow, or even Intel. Again, that's everything else now. Watch them in the morning. Watch the banks, JPM, Bank of America, again, all related to the Fed in the minutes. We need to see how that plays out tomorrow. AMC did good on earnings. They shot up, but we're still just holding those shares. I kind of just like them. Same thing even with Gap. Gap popped out of nowhere today. I don't know what it was. I don't know. Someone said, I think earnings are right around the corner. Again, you're going to get some retail. I think you're going to get BABA earnings. Those are right around the corner, I believe. They moved, again, interesting between today and yesterday, but watch them as far as earnings is concerned. Apple hit $2 trillion market cap. That was big news today. Then Amazon, I forgot there's something with them. But like we said, from watching their breakout points and just how they're falling in line with this whole, again, just FANG and the bigger market leaders, keep an eye on them. I said watch Disney, again, as a rotation stock and how it's been, but it kind of looks like it's broken down a little bit, but we'll see. Ulta They've dropped a little bit. I said if I could get plays, like I want like an $80 both sides play. That's what I'm going to be looking at. But I kind of want to see here again. I like the prospect of it, but I'm not really fully sold on it. Again, my idea is I could just see if there's going to be, there might be a continuation play. I'll get cheaper. Again, you don't always have to play it before, especially if you could see kind of how things are pricing, or if it's just not the risk reward, the premium's not there. You don't have to do it. So watch them target for the final continuation. Like we explained with UEOP, I like those SLV, GLD, just to see how commodities react to everything. And that is pretty much it. But that is your watch list, ladies and gentlemen. And I think that's all. So that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And do it with some peace, baby. Relax. It's game time. No peace, no profit. No profit. Well, yeah, no, then you probably didn't have peace. Oh. But the code loves you. I love you. I'm going to see you in the morning. Let's go.